Alrighty. Well, we had a last second missing person with Ram, so if anyone knows where Ram from Lumita is out there, tell him to come our way and we'll get a fourth and final seat pulled up here. So to start off, my name's Chase Devins. I'm a senior analyst at Masari. Today we're going to be talking all about the Bitcoin ETF, joined by Marshall from Gemini and James from Bloomberg today. I think the best place to start here, guys, is so this summer we hit the 10-year mark of Gemini and the Winklevi twins applying for the first Bitcoin ETF. And we still have nothing on the spot side. However, excitement, I'd say, for the ETF is at an all-time high. We have BlackRock entering the arena now. Everyone knows that 575-to-1 record they have with ETFs. Would love your guys' opinions just on, why is this time different and what can we expect in the coming months?
You want me to go first?
Sure.
Yeah,
sure, I'll start. And hi, everyone, and thank you for joining with us today. So, what makes this time different? I mean, I think generally my take right now is it's not a if, it's a when. This is an imminent thing. I think it's going to do great things for the industry. But we're here. This is a mature asset class. It's a high-performing asset class. The infrastructure is robust. We have futures contracts. There's already other developed nations, like Canada is the best example for spot public ETFs. And so it's just a matter of time at this point. And we're very excited. Our founders submitted an application for an ETF in 2013, and a lot of people laughed, and we fought that fight for many years kind of on our own. We made a decision a few years ago that we were going to withdraw that application and just become basically a service provider to the large fund issuers. So we built something called Gemini Fund Solutions a few years ago, which offers kind of settlement and clearing, liquidity, and custodian services. And today we custody billions of assets live right now for a lot of the Canadian ETFs. So the infrastructure is there. The playbooks have kind of been built. It's, I think a little silly that the U.S. hasn't caught up to other nations.
Yeah. The one thing you asked is what's different is part of it is like Gemini and the Winklevoss brothers, they were bashing their heads against the SEC and the wall to try and get this done. And there has been applications pretty much constantly since they first filed in 2013. And every time they kind of knock away at the SEC's concerns little by little. It's just been constant chipping away at everything the SEC is saying. And we're now at a point where the SEC is almost out of avenues in anything they've denied before. So all the reasons, SEC commissioners were listing 13 different reasons why they couldn't approve, what needs to be fixed. Pretty much all of them are solved, right? And the courts have thrown out a couple other ones that were never going to be solved by issuers, essentially. So now we're at a point where the SEC either has to complain about something completely new, which you could argue is arbitrary and capricious, or they kind of just need to accept that this is happening. So that's where we are. So depending on whether Gensler and the SEC wants to go scorched earth and completely go against the courts and do different things, then maybe we don't get an ETF anytime soon. But other than that, it's basically just been issuers and lawyers continually chipping away at the SEC.
I'll chime in. Is this working? All right, there we go. So sorry for the delay. Big splash entrance there at the end. So I think that it's inevitable. The question is when. Is it October of this year? Is it March of next year? Or is it December of next year? So October of this year, if Chair Gensler says, okay, we lost in the courts. It's March if he says, look, we're going to delay. And if he comes up with a capricious and arbitrary reason, which could happen in March, then that gets litigated, and then it's approved in December. So those are the three time frames. I think part of the other story here is what's the legacy of Chair Gensler? What the SEC has done through the repudiation in the courts has weakened the enforcement authorities of the SEC and has emboldened more challengers. Why does that matter? It matters because when the SEC loses in court, it creates negative precedent. And in that way, Chair Gensler has acted against his own objectives. And I think you're seeing that in the body language if you're watching his recent talks. I mean, he's now saying, well, it's the commission's decision, we have to evaluate, we have to assess. So I think the pendulum is swinging towards digital assets, and the judiciary has done their job, and the SEC does not want to lose further court battles.
Yeah, the one thing I would also add is the dates for 2023, like you said, October, potentially November theoretically, but I would argue that ARK and 21 shares, their final deadline is January 10th. So like if the SEC denies them then and then approves things in March, like that would be insane. So like if they deny ARK and 21 shares in January, I think everything's likely to get denied in March, and then we're going to, no matter what happens, if they deny again, they're going to end up back in court as far as I'm concerned. Whether or not it's over like because you didn't approve everyone for whatever reasons, or because your reasons are arbitrary and capricious, and then they lose in court again, which is the exact issue you just spoke about.
And it's very rare for an SEC chair to have 2 terms. I think maybe Arthur Levitt is the only SEC chair to have 2 terms. So Gensler has 15 months left in his term, and it's usually the approach is for the SEC chair to defer to the next SEC chair to weigh in on key decisions like this.
Yeah, I think that's good color on kind of like the upcoming months and when we can start to expect seeing stuff potentially get approved here. But then kind of looking at like what's next. We know that TradFi, all of these asset managers have trillions of dollars worth of AUM. Crypto has never seen like this scale of capital that could ultimately flow into the door. So in your guys' opinion, do you think this is like just going to be like a quick change? Are we going to have just a tidal wave come in, or is this going to be long and drawn out over several years, kind of similar to what we saw with like gold ETFs and stuff, how it just kind of drew out for several years, but ultimately like completely changed the ETF industry?
I mean, if you're in this room, you probably believe in this industry. Like, I think, initial wave, there'll be an initial wave. I think a lot of the fund issuers will kind of try to chase that AUM and try to get that head start on other issuers potentially. But, the infrastructure is fine, right? Like, Bitcoin can go to 100K tomorrow. Like, nothing really changes. Like, the protocols or the smart contracts like aren't going to necessarily break. Like we could take in 100 billion of fund flow tomorrow and be perfectly fine. It's like infinitely scalable kind of, right? So the infrastructure is fine on that point, in my opinion. There's obviously some operational flows that still need to be worked out, like within the US between the APs, the fund issuers, the custodians, the listing exchanges, but pretty much we're all kind of ready. In terms of like sizing, I mean, I don't know, like I think there's a massive market here. Like I just think that there's going to be 5 to 10, maybe the top 3 will kind of show pretty early who those are going to be. But I think there's going to be probably an initial onset, steady growth perpetually. Yeah. Yeah,
like when the closed-end funds launched, they were the largest raises in history, like $1 billion. Now, digital assets and Bitcoin are momentum assets, though, and right now it's still non-consensus. I think next year is going to be very exciting for digital assets, and if momentum is positive, then it'll attract assets. And now BlackRock is lending their own credibility to the asset by referring to it as an international asset, and you saw that term used earlier by Mike Novogratz today. So there's more and more players like Fidelity that are extending their own credibility for Bitcoin. So I'm excited. I think it's very bullish. I'm looking forward to it. I think you have to reassess though and see where you are in the climate. You need to see momentum, but trading attracts trading, liquidity attracts liquidity, momentum attracts more momentum.
Yeah, I have like 4 points that I'll run through really quick. Right now, gold ETFs in the US have 100 billion. So like I would consider that like the ceiling for any near-term future. Like there's just not going to be enough demand likely beyond that, I think. But you could see a few billion flow in rather quickly into these type of things. We saw BITO get over $1 billion. The fastest ETF of $1 billion was GLD, and back in 2004 they did it in 3 days. BITO did it in 2 days. If we think these ETFs, there's going to be a bunch of them that launch at the same time, but if one did launch on its own, we think that would be $1 billion in 1 day. Now, that's like money that's going to come in, but I wouldn't call it a tidal wave, right? For the most part, it's different from gold, because like if you're a retail investor or a normal person, if you want access to Bitcoin, you already have a Gemini account, you already have a Coinbase account, you have a way to get access. The people that this opens access to are people that either can't hold it, so like think institutions like pensions, endowments that are restricted to holding certain things like securities, they're not allowed to hold Bitcoin. If it's in an ETF, it's considered a security and they can get access. So if those types of people are waiting to get on, that's some money that gets open. The other thing is advisors. Advisors have $30 trillion in assets in the US. They love ETFs. There are solutions out there to like hold crypto with within their own ecosystem, and they can tie in, but they have to sign contracts. It's just so much easier just to like be able to like, all right, I have my brokerage or my system that I buy my stocks and bonds with, and I can click buy, and I can get all of my clients that I want to put exposure to 1, 3, 5% exposure to Bitcoin or crypto or what have you. So that's the type of money that is going to be new coming in. So it's very nuanced. Like I don't think it's going to be a tidal wave, but I think it's going to be meaningful.
I agree. And one other thing is, look at 2017 when the Bitcoin futures were rolled out. That was top of the market.
Yes.
So the pricing beforehand matters. If it rallies substantially in anticipation, then that could be a buy the rumor, sell the news phenomenon. So you have to look at that dynamic.
And the last thing I'd say is like, to me, the bigger thing is like, this is the SEC okaying it, right? Like, it's more about what it says about the asset class than necessarily like there's going to be $1 billion that flows in. Like, it's more about the SEC getting comfortable and understanding and really getting in the weeds here.
Yeah. So going back to that point about like it's a green light for the asset class in general. Do you guys think that okay, a Bitcoin ETF getting green lighted, do we automatically translate that into green lights for other asset or other crypto assets? Do you guys think that we're going to have Ethereum shortly following, or maybe the other Bitcoin forks?
Ethereum is right behind Bitcoin. In fact, at Lumida, our primary, I'm not giving financial advice, but the advice we give to our clients has been focusing on the ETHE product from Grayscale, which has a deep discount. Because if the Bitcoin ETF is approved, then Ethereum should also be approved. Other coins is questionable, right? It'll depend on how the SEC views Solana and other kinds of tokens. But so far, the SEC, our interpretation is they're not going to view Ethereum as a security, and it benefits from its own kind of Lindy effect.
Yeah.
That's the bet we're making. If you're a net saver, GBTC has rallied quite a bit. The discount has narrowed. There's more value in Ethereum.
Yeah, I don't think it's a guaranteed automatic green light, right? Like the questions that, the unclarity, at least in the US markets around securities versus commodities and how these people are going to view things. But, generally, yes, right? Like other assets will come to market or will try to come to market. ETH is definitely going to be like number 2. And then, you look at, top 10 market cap tokens or whatever, like the most robust developer network tokens are. Like people are going to try to launch those. I think there's just clarity that needs to come through. But I think I'm very excited for non-Bitcoin ETFs as well, because I think there's also creative, innovative things you could do with that, whether that's via staking or liquid staking on the back end or things of that nature. So I think that there's innovation behind ETFs with a non-Bitcoin or smart contract enabled tokens as well. But it's just going to be another fight, I think. But I also would say that it's not a if, it's a when kind of situation.
Yeah, I'll go out and say like we are going to see Ethereum futures ETFs in October. We're like 95%, 90+% probability that that's happening this October. But I also think that it seems like the SEC and Gensler are kind of putting Bitcoin and Ethereum off on their own. The CME only has futures markets for Bitcoin and Ethereum. That was a huge point in the reason that Grayscale won their lawsuit. So they're going to approve Ethereum futures. Ethereum spot, if everything goes like I guess it's a less than 50% chance at this point for me, but like if I have to put a date, we're going to see Ethereum spot ETFs in May of next year potentially, assuming spot Bitcoin comes through. So I think it's Bitcoin and Ethereum and then everything else. And what it comes down to is the SEC and Gensler won't say Ethereum is a commodity, but their stance and their legal stance and everything they've done, Ethereum is a commodity, because if it wasn't, then the CME is out of compliance with the way that their contracts are listed. They're listed as commodity futures, not security or index futures, which means like basically the SEC would have to go to war with the CFTC to say that it's not a commodity, which at this point I wouldn't put it past Gensler with some of the stuff he's done, but like absent some crazy moves, it's likely going to be Bitcoin and Ethereum won't be far behind. And that's a completely different stance from where I was in July, because the SEC shot down Ethereum futures ETFs immediately in May, and there's been a huge change because basically the SEC was losing in court and they knew it, and all the issuers could smell blood in the water, kind of what Ron was saying. Like it's kind of taking away a bit of the SEC's power because the issuers are just not listening to them anymore. They're like, you are not even being legal and handling these things properly, so if you're going to go against us, we'll take you to court.
Yeah, maybe even Doge and Shiba will be following soon after if we're lucky. We probably got time for about one more question here. Would love your guys' opinions on, obviously, like this creates so many opportunities for new winners in this space. You know, it could be the ETF managers just being able to clip a fee. It could be the custodians that are actually custodying the spot assets here, or even like the advisory sector. How do you guys think about like the value that's created here, and ultimately who's going to come out the biggest winner?
It's a really, really great question. I don't think it'll be the ETF issuers because there's so much competition that's coming. I mean, you have a tracker with a list of dozen names. Plus, you're going to have price competition because fees are going to drop. So the advisors win because they can differentiate their offering and they can deliver digital assets to the convenience of a brokerage account. So the advisors will benefit. Consumers will win because costs are much lower. Operators or protocols will benefit because there's a legitimate form of liquidity for the asset that they're being compensated within. The venture ecosystem wins too because there's an exit for investments they've made, right? So look at like I think the Grayscale offerings, they've got closed-end funds for Nair protocol and a dozen other these. You might want to look at that. Those tokens, I would hypothesize would do well if a Bitcoin ETF is approved.
Yeah, I don't think the service providers are like the winners, so to say. Like people will find businesses around this, but I think the winners are kind of consumers. I think if you look at closed-end funds, they're expensive, right? Even rolling futures contracts is expensive. Like a spot ETF is going to open up the doors for a lot of people that don't know how to self-custody, that use financial advisors, that don't necessarily hold the underlying themselves, right? So I think consumers are the winners here. This is a natural progression of a mature asset class, and so fees are low, right? Like ETFs, attract AUM because fees are low. So that means that custody fees are low at a firm like Gemini's. That means that the average basis points that you charge customers, it's not going to be above 100 bips, like it's going to be low.
Also, the market makers win too. So Jump Capital, because they're the authorized purchasers on the ETFs that create liquidity, and the market needs liquidity. So the ecosystem would benefit because the ETFs would attract these authorized purchasers, the Jump Capitals of the world, the Jane Streets of the world, the 0.72s and the World Quants, and that's what the market needs.
Yeah.
Yeah, I mean, my view, the people that end up the best are the investors, the end consumers, right? So like one thing that I think is overlooked by most normal people looking at this is like ETFs, they have no commissions. Like if you're looking at any sort of crypto platform, for the most part, you're paying a commission, and you also don't really know what the bid-ask spread is too well. There's also a spread. ETFs are going to trade with no commission, and they're going to trade penny wide. There's going to be virtually no spread between these things. So it's going to drive down the cost to actually trade these things, which I think is, again, better for the consumers. They're going to drive down cost of holdings. GBTC is 2% right now. They're probably going to have to go to 50 bips at least, is my guess. It's maybe even lower, right? Yeah, so it's going to be really good for the end consumer.
Here's another related question. Like, who are the losers?
Yeah.
The no coiners.
Well, I would say this, like, I think Coinbase, not anything I know, half the revenue comes from Bitcoin and Ethereum on a transaction fee model. And Coinbase has been the beneficiary of the fact that you can't access digital assets through your brokerage account. So that demand will go to the ETF market. On the other hand, Coinbase has other things going for them like Base. I'm not making a view on Coinbase here, but that is going to compete with Coinbase as an on-ramp to digital assets.
Yeah, I mean, look, I can speak directly.
Your firm too, right?
So, no, I think it's a net positive. Like, lifts all boats. This is a good thing. Crypto is still driven by the people. I think ETFs are going to be more of an institutional game, but being crypto native, the ability to self-custody, the ability to stake, the ability to send and receive digital assets. Like you can't do those things in an ETF, right? So the ETF is going to be built for a certain segment of people, but there's also a large segment of people who believe in some of the fundamental principles of crypto that will never enter those markets as well. So I think it's a fine product, and I don't think that it's necessarily too detrimental.
Do I need to go to a digital asset exchange to access digital assets if they're all in a securitized form and I can use my brokerage account, right? I think that's the question.
Depends what your use case is, right? But no matter, at the end of the day, if you want to do it, that's going to become commoditized. It's going to be commoditized to do custody and be these service providers, because as the scale goes up, they don't need to charge those higher fees because they're still earning the same income.
And at the end of the day, we'll be custodying the assets anyway. So.
Custody wins, absolutely. Yeah. Custody wins, yes.
All right. Well, that's all the time we have for this panel today. Thank you, guys. And we'll look forward to the next one here.
Thank you. Thanks, everyone.